Hello, traders. Gary Wagner with Gold Forecast. About 11 a.m., the last day, 31st of January, Monday, here in Honolulu, Hawaii, and this is the Daily Report. Gold is currently trading lower, 1331, roughly in that area, trading off about $7 to $8 this morning. We are looking at a 60-minute intraday average or Japanese Henkin chart. We can see this activity that we have gotten over the last trading days, meaning today as well as yesterday, Sunday, here in Honolulu, Hawaii, and it has been trading lower, but it's also been a consolidating market in which no clear defined trend has been able to kind of move itself out. The market is still trading lower. On today's report, we're going to take a look at where I think this particular dip could take us to, what kind of bounce we're going to look for the conclusion of that A wave, and some of the strategies that we'll look to investigate and apply in the next couple of weeks, all here on today's daily report. Traders, we are looking at our daily candlestick chart. This is where I've added a couple of our Fibonacci retracement numbers so we can take a serious look at the market, of course. Now, my belief is really as follows. Have we found support in this area? Well, the one Fibonacci number, and realize I'm drawing three Fibonacci retracement areas. One, this is the deepest of all of them. The second one is coming from this low that we hit in September, and that's going up to this last top. And then the third one is simply charting the retracement from the top to the point in which the market did find some sort of support. That's right in here, right at 1311. And that's giving us these numbers in terms of our target for the bounce back up. So that if the market actually has found support in this area, let's take this as scenario one, and the market is in fact going to move higher. And personally, I'm not convinced of that yet. I think that there's still some more opportunity on the downside, but we'll have to see, because this is a fairly substantial Fibonacci level, this 1311 right in here. It is a 61% retracement of this move right in here. So it does bode to have some interesting support. Of course, this 1326, this is the 38% of the big move. It did surpass that. So that's really what we want to see. Now, if it does have the energy to get that to that level, I would look for a potential point of selling into these rallies anywhere between 1365 and 1396. This is our 75 and 50% retracement levels of this particular move. Where would the market then go? Well, I would have to say this. My personal belief at this point is the major support we're going to find is probably somewhere around 1280. And depending on if the market, in fact, finds support in this area, it does move higher. I would look for the market to come back down and to test this area right at 1283. So traders, how does that fit into our overall view in terms of our Elliott wave? Let me get that chart up for us. And this is our daily Henkin chart. This is with our Elliott wave numbers in. Of course, my belief right now is that we are still in terms of the bigger picture, this being wave 4, 5, and I currently believe that we are in A. A right now is going to be broken up. This is the subwave, this A, B, and C, and I'm not convinced that C is over. If we do get, let's say, a move back up and then a move down, then it's going to be what's typically called a 5 count. 1, 2, 3, 4, and 5. If it does find support in this area, then we will get a more simple correction of this first A wave, because we'll get our basic 3 count. Typically on the way down, you can get a 5, 3, 3, or a 3-5-3. You can get combinations of the both. So we're going to have to just kind of play this out and see where the market wants to head. But my sentiment is that ultimately, I think that this wave really has the opportunity to really go to the bottom of this trend or channel line. Of course, this trend or channel line is simply drawn from these two lows here, and of course we have gone ahead and carried this line up, so that until I really see the kind of support that I'm truly not seeing in the marketplace, I am very hesitant to quickly hold on to a long position. I'm much more prone in a corrective phase to look to sell the rallies, but I'm not really comfortable there yet. So we're still going to sit and hold, but I want you to know the parameters and the exact areas that I'm looking for in terms of our absolute game plan. That's why we talked about that on the last chart. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Tuesday for another daily report. Bye-bye.